Hello traders, today's video I'm going to show you the easiest way how you can trade Volatility 75 index, or you can trade all indices by using this easy strategy. So make sure to stick around with me up to the end so that we will understand this a step-by-step process. So here are the rules what we have to follow. Rule number 1, this W15SB strategy for growing a small account works very well on minute 15. So we are going to use W15SB only on 15 minutes time frame. It works also in other time frames, but the higher you go, the bigger stop loss you will use, guys. So it's so good to stay in minute 15. So rule number 2, find a major OBS of minute 15. We have to find the OBS or break of the structure on minute 15. Wait the price to come back on the killer zone. Take your entry at the wicks of the retest zone. Those are the rules. So before we take you to the chart, I want to explain to you here, and I show you how this strategy works very well, guys, and it is going to change your mind. When you master this strategy, it's going to help you so a lot. As well, we all know that the market, it moves on high lows, high lows, or sometimes it can move making the lower low, lower highs, lower low, lower highs, lower low, lower highs. So when the market is making the high lows, high highs, high low, high on minute 15, this is the cycle of the Volatility 75 and other indices. So this is how it moves. When the market is making the high highs, these high highs and higher lows, we are on the upward trend. So we will keep looking for the buys. Keep that in mind. And when these high highs and high lows are forming, are you getting the point? The market is breaking this previous, it will break this. When it breaks it, it will, here down here there will be a zone which was formed, which created here will be a zone here which helped this move from down to the up so that it can break. Are you getting the point? So whenever that happen, whenever that happen, what you have to do to highlight your zone, to highlight the recent high or the recent lower low. So this is our recent lower high, the recent high. So guys, so the market have broke that in minute 15. After breaking that, we wait the market to come back at this level, guys. So when the market reach here at this level, it will also continue moving to the upward. It will continue moving to the upward to take this high. So the only thing what you have to do to wait the market come and tap in here. If the market is not going to go up, it will break this zone area and it comes down. If the market is going to go on your direction, is going to bounce from here and then it goes up. So with this demand zone here, guys, is it a demand or is it a supply, whatever. So with this zone of demand, where people they can buy, it's a demand. Supply, where people they are selling. Are you getting point? Always we buy, this is a demand, and this is the supply where we sell. We sell here, we buy this. This is a supply up, this is a demand zone, we buy. So when the market reaches on that demand zone, for us, we are not trading demand and supply. No, this is a little twisted a bit, guys. So here, even before the market hits to this zone, it will stop around this area, guys. So we take all of this demand zone, our zone, we wait the market to come and tap in, and then we use pending orders. It can be a buy limit, or you can wait the market to enter in your zone. You also put a buy stop. When it reverses, it goes with you. Before you do that, you always have to wait to see if the market is doing like this. Are you getting point? And finally it does like this. Are you getting the point? Like that. And you waiting here the market to come back. Let me repeat this a bit. So if the market is doing like this, high high, high low, high high, high low, high high, high low. Are you getting the point? Comes, takes up the high, find a W here like this. Even if it's very small, whenever this measure is broken, don't take a buy here, because the trend will be already shifted from the buy to the sell. Oh, if you find here around here the top, the market is doing like this, is doing like that way. Are you getting the point? Don't consider this. You wait a clear chart so that you can take your entries. So that is a buy. So let us look for the sell. It is the same thing. The market will be doing like this. It will be moving like this. So this, it doesn't matter. We are on a downtrend or we are in an uptrend. We always follow the market. What is doing, we trade what we see. So if the market is doing that, let us say that we are around this. So it have come and moved up like this, then come and break this structure. So if this structure is broken, before the move of coming back here, there was something like this. Candles they was doing like this, and finally they come and take out of this. So here, so this demand is around this area here. The demand is going to be on this place. I'm getting point for the supply, but our zone, for us, our zone is around this area here. So for us, we take entry at around here, and the stop loss, it's supposed to be above this structure. Are you getting the point? So when this minor structure, they are working very well because we're having a major structure. How did you identify the major structure? The major structure is like this. The market will be coming like this, goes little bit, comes, and then comes like this. Are you getting? Come again like this, comes and break this here. So we see the overall, these the little high highs and high lows, those are minor structures. These ones are the major, which are leading the the structure. And another thing to identify the major structure is like this. When the market is making the high high, high low, high high, this move from here to here, if it breaks this, this one it becomes a major structure, and this one a major structure. If the market comes like this, high high, high low, high high, high low, and then moves like this and this all are major structure. So if the market do like this, making the high high, high low, are you getting the point? High high, low high, lower low, are you getting the point? These also are the major structure. So it do like this, failure to break this, comes again, failure to break that, then finally, let me repeat it here again. When the market is doing like this, lower low, lower highs, lower low, are you getting the point? And then it makes again a low high. Hold on little bit, I want to do something like this. So yes, the market is making lower low, lower high, lower low, lower high. So when it comes to make the low, it stops here, comes again, stopped there, and then moves, breaks this. So we don't consider this as a major, we consider this one as a major, and we consider also this zone here is the major. Why? And this is the major, are you getting the point? Because if you draw your trend line, this one will be low, have not yet touched to the trend line, but this and this one will be on the trend line. So whenever the market move and goes up, the move where started from and breaks that structure, we call it a major. Those ones which are in between there, they are a minor. So here how our strategy comes in. When the market is moving lower low, lower highs, lower low, lower highs, are you getting the point? So it will make the some little what, little moves here, comes here like this, and then come and break these ones. Are you getting the point? So which means this here was what? Was a major structural break of this one. Are you getting the point? And remember, before, around this area, there was some candles like this. There are some candles like this, guys, like this. Are you getting the point? So these candles, when you go on line chart, you will find that there is something like this, small. Are you getting? And then the market gets a move to come and break this one. If you come in the candle, just you will see it's like one candle. It's like one candle. Are you getting the point? But so if these minor structures they are like that, are you getting the point? Finally the market breaks and come and break this major what? Major structure which was here around. So what we have to consider, that this move where it started from, there is a little zone here, that little zone before the supply. Are you getting the point? The most cases supply here, they may not mitigate it. Are you getting? They stop from that zone, because if this zone is broken here, there is this minor zone which caused all of this move. That's why those ones who are trading supply and demand, they take all of this structure. Are you getting the point? So for us, we are taking this minor. There is some weeks the candles, they will be like, the candles, they are going to be like this, having some wicks. So for us, these are our selling candles, guys. So for us, we are going to draw our zone like this. Are you getting the point? Are you getting the point? So we wait the market to come back So this was the market has breakout. Are you getting the point? We wait the market to come back and tap here. This is our selling zone. This is our selling zone. It's where we put entries from the body of the candle to the wick. Starting from the wick of the candle to the body, we take that thing. So as our what? As our zone. All of that zone is our selling zone. Where to put the stop loss? Stop loss must be above of those wicks. Of those wicks must be above. The market will not come and hit you at TP if it is going on your way. And another thing, it will never come back there. It will never come back until it hits you at TP. Are you getting the point? So, like always say that too much words to a wise man, they always useless. I know, guys, you're good in trading. Most of you are the best traders. So I think you have got an idea. I'm going to take you to live chat and I show you some examples. So I will be closing this video. If you have any question, make sure to comment it, to leave it in the comment section so that we can answer you. That is the only way how we can communicate. And another thing, if you want to talk to me directly, go to the about page, then you will find my contact forms there, guys, including WhatsApp, so that we can talk. You can talk to me if you have any suggestion, if you have any idea, or you have your question. I will be ready to answer you. I will be ready to talk to you. So let us go to the live chat and I show you. Alright, guys, we are already on the live chat. We are on the live chat. So this chart, you can see that the market, how it moving, guys. It moving, making the high highs, high lows, high highs. So this is what I was telling you, that the major and minor structure. You can see that this is a minor structure, but this one is a major, and this one is a major. This one, all of this, it's a major. Why? Because the power of breaking this zone started from here, from this down, goes up. So whenever the market break your major zone, whenever market breaks your major zone like this, do you see? It breaks. After breaking that major zone, it will come back to minor zone to retest it. This is our minor zone, guys. Do you see? Do you see? So you will find all of these things on line chart. On line chart. So let us go to the line chart and I show you something, guys. All right, we are back. You can see very well on the what? On the line chart. Line chart that we having these ones. We having the minor structures here. These are the minor structures. What I was telling you, these ones, the small ones, those are the minor structures. We also consider them. And they are our key levels for our entries. So if we put here a line, let me use a chart line. If we do, you see that this move, when it was moving up, that this move from here to come up here, it breaks this, which means that the market will come and make a retest of this minor zone so that to continue to go up, guys. So let us also put here our line, and you see this one. When you put that, then you return back to what, to candlestick, so that you can make a zone very well. Let us go back to candlestick, guys. So we are back on our candlesticks. So we make a zone like this from the wick. Let me zoom out, you will see very well. We make our zone from the wick to the body. This is our buying zone. Are you getting, guys? This is our buying zone. Where to put our stop loss? Our stop loss is going to be below. Is going to be below of this, where the move started. You can put it here, but that is too much for me. Always put here. The market will never come back there. How to take the profit? You will get a triangle tool. This is our tool. You measure exactly from your entry. For me, my first entries are here, exactly the week pending orders, buy stop, and my stop loss there. I measure from there to here. That will be my TP1. Are you getting the point, guys? That will be my TP1, which means that I was ready to lose $1 or $5. Let us use the example of $1. You're ready to lose $1 and it's already in profit. If I have two entries, which means I will be having $2, I take one, I come on break even, and then I let also market run. Then this will be my 2P2, which means I'm losing 1 to gain 2. You can see the market after hitting that 2 exactly, it started to reverse. Are you getting point? It reverses. But what I want to tell you, you can see very well from this zone. Are you getting the point? The market had not even come back here. It have just moved all our way. So assume that you was needing to trade demand and supply. Let us say that this the last selling candle, it was it has our killer zone. Most cases I see other traders, they take the body like this, like that, where they put they are pending orders. And those ones who are trading smart money concept, they will not take this. They are going to find the what they call this zone, how they call it, this is what, favorable gap. They call it a favorable gap. They will find this a favorable gap, and then they take 50% of this favorable gap. Then the stop loss also, it will be down to this side. Are you getting? 50% is there entry point, and then they put the downwards. They target the favorable gap. So sometimes the smart money or the smart money, they are good way to go. So if you have been waiting, the demand and the trade had gone only, there are many strategies. My WTB strategy also here can work very well, but now I'm showing you the W15 SB, guys. This is how it works. You can see it very well. Sometimes the market will come. Let me clean the chart and then we move very well, guys. Sometimes the market will come. For instance, you can see here, guys, the market will come and break this. Are you getting? This is a minor. So don't consider this minor until this major was broken. Until this major should be broken, you can see that this is the major, so that to consider that minor, and this could be a major if this was broken, so we can consider this. Are you getting the point? So avoid to take these ones, and you think that the market has break this, is going to come back here, and then you take what? You take a sell and the market comes to your way. Finally it will come and hit your what? You take you off. Always wait. You can see this is a good example of major and minor structure. You can see it very well that we have some lower highs here. Are you getting the point? All of those, they are minor, guys. The major is only this one here. This is the major only. This one is the major. This point and this zone is the major. So when the market it moves like this, break this major, we take the last of the moving any minor which is here. That's why we go on line chart to find the little minors. What we can see now, here we can see this one. Let us put our line and we see what happened here exactly. Let us go to the future. Unfortunately it didn't come back. Yes, sometimes we miss. Let us see, is this touched? No, it didn't also touch. Are you getting a point? But it touched this ones, this minor. So always you might miss, but if you get it, you can catch it and you squeeze it seriously, guys. So let me show you another example, guys. So this is a good example here. You can see that now there is a major and a minor. So where is the major? The major is this one, guys. The major is this point here. You can see this is a major, and it comes down here, comes up and comes down again, guys. You can see this one is a major. Why? Because this here down, it was broken. This here down, because this broke this, so this one is a minor. So we count if the market breaks this major, it's no longer minor. If it breaks this major here, there is a zone where the market will come back to retest. So you can see if we take this, let me bring the line here down. If we take that as our killer zone, you can see it, then the stop loss down. You can see, do you see what happened? Do you see what happened, guys? You can see, do you see? It comes and mitigated you, squeezed a little bit. When do you get at the break even? After this zone taken away, guys, you come and break even. Or you can use our system, guys, of calculating, guys. You can calculate from the stop loss to your entry point. You bring here like this. If you are TP1 hit, you come at the break even, but which means this was going to take you TP1 and then move a little bit, they come and hit you break even. Are you getting it? But if we can consider this major to be broken, are you getting the point? It can help us too, guys. If this get broken major which moved from the, which breaks here, if the market break it, is when you go to you break even. This will be better. You can find almost from here to here. You already made two. You already made it 2 to 1, guys. You already made it 2 to 1. And then when you reach here, guys, you go to the break even. Already you are in 2 to 1. You leave the market to run. If it comes, it comes and hit the break even. If it goes in your way, you can see how many was this. These are like those are 3, those are 4, those are 5. Risk to reward, you lose 1 and then you get 5. Are you getting a point? So let us count again. Let us count. Let us find example, another example, guys. Let me delete everything again. We get a clear chart. Very well. Yes, you can see here. Let us see here, and you see something, and I tell you something, guys. You can see this, guys. You can see this one. it is a major. Why? This one was a power to come down and then finally break. If it break this is a major, and then the market was supposed to come and retest this and then continue go up. Was supposed to come here and make a double bottom, then it goes up, because this was a zone which pushed this, and here there is no other minor except on this. So it was to come back and then, but finally breaks this. If it breaks this, we find the minor around here, which means the minor is this which they have broken. Are you getting? We find weak to the weak. So if you can see that when the market was moving down, we see here when this zone was forming, we can see this a rejection from here to here, a rejection. This is the minor. We take all of this zone, this and that, it's our sale. Are you getting the point? When the market breaks here and then we go to the break even, you can see the market comes up itself, and then the market reversed to the upward, guys. But all in all, it's better to come in H4 and then you get overall direction, so that you can know that because if you getting this on the downtrend, they will not give you a huge amount of the money. Even if you get a good setup, you identify it, you catch it, it will give you 1-to-1 and then come and hit you break even, and sometimes it will not even give you one, come and hit you stop loss. So it's better always to go in H1 or H4. You find the overall direction and then you go back in minute 15, so that you can implement our W15 strategy. So let me take you to the live example and I show you, because I use 3 strategies. Strategy number 1 is WTB. WTB is the one which I have used to catch this move, and is still going on. Just I have put it the phone on flying mode, but the structure is still working well by the time when I started to record this video. So as well, you can see here now, this is live minute 15. You can see that we had here a reversal. The market is making it major highs and high lows. These are big moves that we can catch. So what shows us that the market is reversing this, guys? This is the one which showed us that the market is reversing. The market come here, spend a lot of time, and then finally moves up, which means this zone was the zone to support it, continue going, making a high. The market failed, then come and break this zone 1 and then break the zone 2. This confirms and tells us that the market has changed. As long as the market do this, it's our time. It's our time, guys. It's our time. When the market does that, we know that the market is going to come back here, and then we put our pending order around this place, and then stop loss should be above, and then we ride 2-to-1, guys. We take 2-to-1, then after hitting that 2-to-1, we leave the market to run. So that is all what I have. If you have enjoyed this video, make sure to subscribe to this channel. Click the notification bell to be notified at any time when we will be releasing a new content like this. So go on and watch those videos which are popping up on the screen to master the Volatility 75 index strategy. See you to the next episode. Peace.